All right, well, sometimes we talk about the trade war as if it's a thing that may not actually be happening. But as we see here, it is definitely happening. This is a chart of U.S. soybean exports and their change over the last year. The big purple line that's going down 98% is how many soybeans the U.S. exports to China.
All right, let's get one thing straight. The trade war isn't some distant political debate. It's real, and the cracks are already showing. US soybean exports to China didn't just decline, they collapsed by 98%. That's not a dip, that's nearly a wipeout. So what happens when your paycheck, your job security, and your grocery bill all take a hit at once? You're about to find out. Canada recently shut down its border on $3.2 billion worth of American soybeans. And here is why that is significant. Soybeans nourish 95% of U.S. chicken and 89% of pork. One policy action and farmers can't sell, truckers can't drive, and consumers, you and me, pay more for food. But Canada's prohibition was the first domino. China, our largest individual customer, abandoned almost $1 billion worth of contracts. And while America faltered, Brazil moved in, captured the market, and constructed the future. Stick with me until the end, because this is a story that begins at a border crossing in North Dakota, but it concludes at your dinner table and in your wallet. Canada's shock move. At 4:47 a.m., Tom Mitchell, a grain elevator operator in Fargo, North Dakota, sat by powerless as 42 rail cars carrying premium soybeans valued at $2.1 million were denied access to the Canadian border. 30 years I've been moving grain north, he said. Never have I seen anything like this. Canadian authorities alleged they discovered unauthorized genetic alterations in American imports. American authorities accused the tests as flawed, even politicized. But perception equals reality at the border. Backlogs grew from hours to weeks. Inspection fees ballooned 340%. Shipments waited, awaiting clearance that seldom arrived. The ripple effects hit both sides. In Winnipeg, farmer Sarah Chen's costs rose 23% overnight as she scrambled to find feed from pricier suppliers. We built our business on affordable American grain, she said. Now we're paying Canadian prices, and those costs go straight to consumers. For farmers, truckers, and elevators, the collapse wasn't financial. It was a matter of trust. And in farming, once broken, trust takes years to repair. China walks away. But the bigger jolt came from Beijing. In one morning, Chinese importers canceled $847 million worth of U.S. soybean contracts. Iowa farmer Dave Patterson recalls it like it was yesterday. It was like seeing your best customer drive past your shop without even glancing in the rearview mirror. The reality? China's shift away from American soybeans wasn't precipitous. During 18 months of diplomatic tension, buyers slowly hedged their bets, and their backup option was Brazil. The numbers tell it all. U.S. soybean exports to China plunged 78% in 1 year, from $14.2 billion to just $3.1 billion. Meanwhile, Brazilian exports surged 156%. Maria Santos, a commodities trader in Chicago, explained, "When a buyer like China doubts your reliability, whether it's politics, regulations, or logistics, they don't wait. They call Brazil. They call Argentina. They call whoever can deliver." And the repercussions spread throughout America. Grain silos were overflowing. Railroads lost their contracts. Seattle and New Orleans ports observed ships circumventing the U.S. altogether. Farm loan arrears hit 41% in major areas. Equipment sellers witnessed orders evaporate. And then came the actual earthquake. Brazil's $15 billion blockbuster deal. Brazil's $15 billion bonanza in a Brazilian conference room. At 2 p.m. local time, an agreement was finalized that reconfigured the food chain of the world. By sunrise in Illinois, the shockwaves had reached. Brazil's new $15 billion farm trade pact with an Asian buyers consortium was more than a contract. It was a remapping of global agriculture. 3 season orders were prepaid, locked in and back. Carlos Mendoza, who operates a 15,000-acre farm in Mato Grosso, laid it out straight. They're not buying just our beans. They're buying our infrastructure. And he was on target. While American farmers engaged in trade wars, Brazil constructed new railroad/transport costs by 40%. Santos ports increased capacity 34%. Brazilian banks introduced financing packages that offered guaranteed delivery dates, something us exporters couldn't compete with. The agreement encompassed more than just soybeans. It involved infrastructure financing, financing of equipment, and the exclusive agreements that bind Asian purchasers to Brazilian producers for a period of 10 years. Jennifer Walsh, an agricultural economist, said, "When buyers sign 10-year agreements, they're not selecting a harvest. They're selecting a future, and the future currently belongs to Brazil. The supply chain revolution. Drone footage speaks louder than numbers. Cattle, train, long convoys of grain trucks rumble down newly paved roads in Brazil, bound for glittering new ports that didn't exist a half-decade ago. And in Iowa, trucks idle outside grain elevators with no destination. Brazilian logistics hubs buzz with live GPS monitoring, automated elevators, and ports so streamlined they handle grain 23% quicker than U.S. infrastructure for 31% less expense with 98% uptime. American exporters, on the other hand, are left with aged railways, clogged ports, and warehouses closing down. Lisa Rodriguez, a grain merchandiser in Iowa, summed it up. Brazilian suppliers can tell buyers exactly when their grain will arrive, what condition it will be in, and what it will cost 6 months in advance. Meanwhile, we're working with railroads that run when they feel like it. The gap is widening, and so is the financial strain when credit runs dry. In Illinois, farmer Steve Harrison received a call from his bank at 7:15 a.m. His line of credit was cut 40%. The same 3,200-acre farm that was eligible for expansion just months earlier was now too risky for the bank that had financed 3 generations of his family. Throughout the Midwest, it is the same regional bank. Agricultural lending has declined 23% in 1 year. 67% of banks had tightened standards due to market uncertainty. And in Brazil, financing grew 34%. Government-supported banks provided complete packages, production loans, risk insurance, and guaranteed markets. It made Brazilian agriculture more secure and more appealing to international buyers. American farmers, who used to be the world's best bet, are now fighting just to get loans at all. The price cascade. And here is where it hits you squarely. Your grocery bill. Rebecca Martinez, a purchasing manager for an Arkansas chicken processor that handles 2.1 million birds a month, watched soybean meal prices rise 34% in one night. When feed prices pop like this, everything is different, she said, and she is correct. Soybeans are fed to chickens, pigs, and cows. When the price of soybeans increases, feed becomes more expensive. Increased feed expenses compel farmers to reduce production or increase prices. Shortages are the result, and prices at the consumer level go up. Pig farmer Daniel Rodriguez saw his feed expense skyrocket by $47,000 a month. Either I scale back or I go broke feeding the pigs, he said. The mathematics are dire. The cost of poultry feed increased 23 cents per bird. The dairy farms are shelling out 31 cents more per G Allen. The pork farmers are additionally charged $12 per HOGW sale prices. At grocery stores rise week by week. Chicken breast has risen 28%, ground beef 31%, milk 19%. Soybean oil deficits ripple through processed foods, restaurant friolators, even biodiesel. Other oils rise as well. Canola 41% higher, sunflower 29% higher, palm oil 22% higher. Restaurant owners take the hit worst. Jake Morrison, owner of 3 Detroit pizzerias, had his food expenses increase 22%. We can't increase menu prices that quickly without losing business, he explained. And all of this, every single spike, is merely a symptom of a system beginning to fray. When ports go silent, in Seattle, silence speaks. At Terminal 47, where once there came through 340,000 tons of soybeans monthly, the cranes move hardly at all. Longshoreman Pete Kowalski works there 19 years. Used to be you couldn't even find parking, he says. Now half my crew is laid off. This is the look of infrastructure collapse. Not instant ruin, but a gradual, steady siphoning away as commerce routes disappear and towns shrink. Rail shipments decline. Elevators stand idle. Trucking companies lose business. Insurance companies boost premiums. Banks retreat. Each reduction, each shutdown, fuels a vicious spiral that renders us exports less competitive daily. And once those commerce relationships disappear, they don't reappear overnight. So here is the bottom line. The global agricultural map is being recharted in real time. Brazil is constructing the future. America is observing its foundation crack, and each step of this collapse, from rail tracks to supermarket shelves, freeze up right in your wallet. This is not simply about soybeans. It is about faith, commerce, and the food supply of the world. And now the question is easy. Will America rebuild or stand by idly while the future slips past us? If this narrative awakened you, give it a like, leave a comment below with your thoughts, and don't forget to subscribe, because the next installment of this global transformation is already in progress.